This is David Patrick, Fitzstock Charts market video update for February 6, 2019. We are in a 22 plus day uptrend. I don't know that we've seen an uptrend like this in a long time. We can talk about it being long in the tooth. We can talk about it being overbought. The big question is where are we going from here? Because the easy money is in the past. And you needed to make your money for the last 22 trading days. Because we get 2 to 3 good uptrends every year. Last year we were super privileged, super spoiled. We had 11 of them. But we're having a huge one this year. Our 90% club is growing through the roof. We're going to continue to look at that 2001 bullish historical chart pattern comparison. I continue to be 105% long market exposure in my bigger accounts, which is my investment, my retirement, my swing long accounts. You saw me go from all-in leverage long back in November of 2016 to all cash October 2018 to leverage long again this week. You saw me put on spider calls. You saw me put on TQQQ. You saw me put on Apple. You saw me add to Apple twice. You saw me get along the ES. And you saw me today post getting along Xilinx. So this is the longest market exposure I've had since October last year. Does it make me nervous? No. Because I got in early in the uptrend. I've scaled, I've added, I've put on calls, which give me leveraged exposure, and I have defined risk. So you should have defined risk too before every single trade. Know where your stop is. The 90% club right here. Here's our 3 Apple trades. The first one was from the ESFL, the March 160s. The ad is right here, and then the other ad, 165, 220 on those calls. And actually, I believe those even went higher because we just hit new highs on Apple about within the last half an hour. So we have 43 different options that are up over 90% with January, February, March contracts. 8 of them are tripled, meaning over 200%. This one's, the FAS calls are up over 344%. Most of these are from our engagement spreadsheet focus list, which is our daily focus. Comes out every day. Twitter, the Twitter posts are supplemental. You don't have to follow Twitter. You don't have to follow my trades. All you need is the focus list that's emailed out every day and identifying the trend, which comes out in the daily email if we're in an uptrend or downtrend. That's all you need. You have your ammunition every single day with the focus list. If you have the time and you're aggressive, by all means, log in at Twitter, see what I'm doing. You want to ride the coattails, ride the coattails. You want to trade 5-minute rules of engagement, trade that. There's still going to be an educational video on that coming up in the next couple weeks. I've been absolutely swamped with emails, questions, my own personal trades, which I'm posting, and updating all these spreadsheets and everything. So I have not been able to do that video yet. Okay, lots of things to go over here. 1956 over here. I crossed out over here. I think we're starting to diverge from that pattern as we melted back down. Let's see if I can get some drawing tools up. We melted back down after failing at the 200 SMA. The 2001 pattern right here in the middle, you can see we grinded up and we bull flagged. This gray area is a long, elongated bull flag. You did get knocked out of trend before price strength confirmation. And I'm leaning towards this. And by the way, this is the Dow Diamonds on the right. Actually, I think that is the SPX. I think I did put the SPX on this time. No, because the SPX did not capture the 200 SMA. So we have the Dow Diamonds on the right. You see it bull flagged here above. So if we're going to continue on the same page, you can see the MACD is similar. MACD's at new highs right here with price. The 10 SMA is going through the 200 SMA, which it's about to do. So we could be, it's never going to be an exact historical chart pattern comparison, but we could be about right here with this pattern, which suggests, if we are, that we could see some sideways moving. Instead of breaking a new high every single day, it's time to consolidate. That doesn't mean that we can't go to new highs today, tomorrow, the next day. It just means that most likely the bigger part of the gains are over, and it's time to get a little bit sloppy, move a little bit sideways, maybe even get knocked out of trend at some point next week before the next leg higher. And I do think we do get to 2,800 now in the SPX. I had a 2,600 bogey, 2,650, 2,700, 2,740. And I'm now upping it again to 2,800 because I think we'll get there, and we'll look at those charts in a moment. Here is the Apple historical chart pattern comparison. I have not updated this. Apple's actually up a little higher. And we pointed out when the 10 got through the 50. This was 2008 over here on Apple, 2019 on the left. And I do think Apple can come up here to 180, actually even close to 190, just like we hit the 200 SMA. So I think it gets there. Can it rest beforehand, just like I think the market might do? Yes. But there's no reason to stop yourself out on this trade. Probably, 162. 162 would probably be your stop on any new trade, just to give this thing room to consolidate. Do I think it's going to consolidate and go lower? I have no idea. I think the bogeys are on the upside. What it does in the short term, I've taken off most of the risk. Now I'm looking to exercise my calls at the end of the week to get 20% long Apple and stay 20% long Apple versus my stops. I don't want to pick a top with Apple. There's a bullish historical chart pattern comparison. It's the analog we're going to use for right now. And as long as we stay above this 50 SMA, which we'll get to in a moment, I remain extremely bullish on Apple. Okay, so there's a couple more things I want to talk about. First of all, this is the Xilinx chart versus Apple. This is not versus. There is our number one trade setup. A couple people emailed me this. I like to treat all trades relatively equivalent with size in uptrends. And I've gone over a zillion different price patterns we looked through. WV, MA, break it down trends, break up trends, bull flags, bear flags, inverse head and shoulders, head and shoulders. Those are their bread and butter price patterns that we look at. Now, once we get that price pattern, then I'll scan hundreds of charts looking for similarity with higher time frames, price structure, moving averages, etc. And then once I get those historical chart pattern comparisons, I get conviction of what I'm going to do. And that's why I got long spiders, I got long ES, that's why I got long Apple, and that's why I got long Xilinx. So before we get to that in a moment, I want to talk about two other things. ES versus ESFL. ES is obviously S&P 500 futures. Some people don't trade futures. You don't have to. Okay? Once again, a lot of the posts on Twitter are for day traders, for aggressive traders. You have to figure out what is best suited for you with the service. Some people don't log into Twitter at all. Some people don't even use it. Some people use it and they monitor stocks all day. Everyone's risk profile is different. Everyone's trading time is different, trading time horizon. Okay, so you have to find out what best suits you. We know for a fact the methodology works. We just looked at the 90% club, right? Just this year with January, February, March contracts, we have 51 wins. 3 stops, 2 entries that haven't been paid. JP Morgan and one that just engaged the other day with ERX. It's a 90% winning percentage. Unheard of. Unheard of. Will we continue to bat 90%? No, absolutely not. We've batted 75% win-loss since 75% winning percentage since we launched the service. It's just been exceptional lately. But once again, you will have losses. You have to manage them. And you also, when you have the winners, ES, Spiders, TQQQ, Apple, Xilinx, after you've scaled, it's imperative if it resets up, you add. For example, Xilinx today, right? It engaged from the ESFL back here. So you've scaled, you scaled, you scaled. On price strength confirmation, you add. If you haven't scaled, then obviously you're scaling up here. But that's how you trade. So if you had 100 call contracts on, now you're down to 25. It bull flagged above our setup. It just showed price strength confirmation, new highs with MACD. You add. Okay, so getting back to ES versus ESFL. ES is the S&P 500 futures. 5-minute ROE, we talk about all the time. That's 5-minute rules of engagement. That's using our rules of engagement, which price above the 10 SMA with MACD, with specific price patterns that repeat themselves on a smaller time frame. 5 minutes, 5-minute charts, 5-minute bar charts, 5-minute candles. It's only for aggressive traders. You do not have to use it. I don't want to confuse anybody with the service. But I will do a video on this coming up in the next couple of weeks, and we've talked about it in almost all the videos on day trading using our rules with the S&P 500 futures. So getting back to ES versus ESFL. ESFL obviously is our focus list. Comes out every day. It's a spreadsheet of our new entries. So I have been focusing on our focus list and less on the ES. We have a VIX that's almost breaking 15 after being at 35. So when the VIX comes down, the ES trades are not as good because the volatilities come down. It's sloppier. When the VIX goes up and we break trend, the 5-minute rules of engagement, we hit out of the park because most of the easy money is during the day. When you're trending and grinding, most of the easy money is swing long. Swing long is long-term trades, not just for a day trade, long-term, multi-day, multi-weeks, sometimes multi-months. That's what pays the most when you get these grinds, these 22-day uptrends. All right, so getting back to Xilinx, I could go over, which we don't have time because we're already 12 minutes deep into this video. There's hundreds of bull flags. We can look at all of them. All right, they all develop differently. Some of them we use the Fibonacci retracement to get long. Some of them we use, by the way, I think this one was from a fib. I got to double check. Some of them we just use price strength confirmation out of a bull flag. So I just highlighted one, and let me tell you, since we launched the service, there's probably over 1,000 of these, all right? But I just highlighted one. This is Apple on the right. I believe this is 2004. Yeah, October 2004. Similar pattern, similar price structure. Breakout just like in Xilinx, right? Xilinx, Apple over here on the right. After it bull flags for a few days, 10 days starts to catch up with price, it reconfirms. Now this one doesn't always have to work this way, but this specific one erupted. Obviously, they don't all erupt. Some of them just grind higher. But I will tell you, if this price pattern, this historical chart pattern comparison continues, and we do see some breakout even further with Xilinx tomorrow, I'm going to look to add. I'm going to look to add. I've already scaled. I'm going to look to double up like we just talked about again on a winning trade, just like I did with Apple. I've talked about this Xilinx now for over a week. So what do I have over here? So let me magnify this so we can all see what's going on. This is a price breakout. On the left is our current Xilinx. On our right is 2004 Apple, just showing a price pattern repeating itself, right? The bull flag, 10 SMA catches up the price. You're breaking out the new highs, breaking out the new highs, right? So what do I have up here is a lot of times we use Fibonacci retracements to see how far we can retrace. These are fib extensions. So I drew it from the high of the bull, this bull flag, to the low, right, the pull, and to see how high this thing went. And it easily did 100% Fibonacci extension before it went much higher, which we won't even talk about because we're not going to make that kind of prediction. So if we continue on the same price pattern structure, historical chart pattern comparison, and this thing does, let's just say, break out further tomorrow, which we're not going to predict, but let's just say it does, the Fibonacci extension on Xilinx is up to 130. So I would say if we're going to give bogeys, I don't like to give targets. Why don't I like to give targets? Because what happens when we hit a target? People take things off, and they say, all right, I'm done. They sell the whole position. Those are scaling bogeys to scale some. When we hit 2,600, did we get all flat? 2,700, all flat? 2,740? No. We use it to pull back the throttle, pay ourselves, and then when we reset up, we look to add. So, getting back to this chart, Xilinx, yeah, I think our bogey for the next scale, if we see some kind of price strength confirmation at some point later in the week, could be up at 130. All right. Once again, do these all work out to be a home run? Not all of them, right? If 10 to 15% don't, we know our stops. I would say right there, minimum is your stop, right? 109.29. That's the previous day's low, and we would break the 10 SMA and break trend. So 109.29 is your stop, and either your entry is here, intraday with me here or there, you know where your stop is. So a bull flag to new high is definitely our number one setup. So let's get into the rest of the market here. So here is the S&P 500. There is that big obstacle. There was our bogey, 2740. So if we get to the Fibonacci's, now this time we're not going to use the extensions. We're going to use the retracements. Those are the old highs. Those are the recent lows, right? We draw them. Where are we? Well, let's draw them first. We're above the 61.8, but we're hitting ourselves in the 200 SMA. So we want to stay above the 61.8. We want 10 SMA to catch up. We want a bull flag, preferably bull flag above the 200 SMA. But here's the thing. This is the SPX, by the way. I do think, it doesn't matter what I think, we only pay attention to price. But there's a gap here, right? There's a gap magnet for this, 27.85. And, there's gaps really all the way up that we haven't filled yet. Here's a gap right here, 28.81. So I would say once we build some kind of elongated bull flag again above a rising 10 SMA, and we do get through this massive resistance to the 200 SMA, that somewhere up here is the next bogey, because that's where gap fills are. And we're already above the Fibonacci retracement of 61.8, which tells us there's a high odds we're due a full retracement. Up in here, once you fill these gaps, if we get up here, I would be reducing risk, right? So let's go over this one more time so we're all real clear. We had an early uptrend that started and we got knocked out of here, right? Once it reinitiated right here, we got long. And then we scaled. It bull flagged. You see the bull flag? Couple 3 days, 2-3 days above a rising 10 SMA. So it showed price strength confirmation to add, right? So you get longer. Then you get through this 50 SMA, you bull flag again. It shows price strength confirmation to add. You get longer, all right? So here's your bull flags. 1, 2, then price strength confirmation. And we're looking for a bull flag. Sideways to possibly lower movement. We could still break the 200 SMA just to gather some steam. Maybe shake out the weak hands before higher. So now, I don't want to ever become overly bullish, overly bearish. Too much conviction gets you in trouble. Real fast, when did I go all cash? Right back here, we broke an uptrend line and went all cash back in 10-11, 10-10. Broke an uptrend line. That was over 100% long from October 2016 all the way up. So I'm back to leverage long. I think I was 40% long in here. Added. Now I have calls on spiders and Apple. And I'm long TQQ, which gives me over 100% long market exposure if I exercise those calls. And I am going to exercise those calls. But I always want to ask myself, where am I wrong? Well, I'm not wrong yet because I've paid myself, I've scaled, right? And I haven't even exercised the calls yet because they expire at the end of the week. But where do I get out if I don't want, I don't want to give back all these massive profits? And let me just tell you, we're having a big year. Well, I would say right here, the bottom of this bull flag would obviously be big trouble if we would come down here and break. Now, what is that candle's low? So you might want to write this down. 26.12. 26.12. Well, that's 16 handles below where we're at. 116 handles. What is that? 5%? So if you're not triple long and you're just regular long the spiders or the SPX or the ES, you got 5% downside risk before you would get stopped. If you're a swing long trader. If you're allocating new money up here to the index, that's very difficult to do. We are stretched. We are at resistance. What I would do is if we consolidate is look for stocks showing relative strengths. Well, Apple showed some relative strength today. Xilinx showed some relative strength today. So you want to look at the stocks that are on the ESFL, our focus list, that are showing relative strength if the market does consolidate. That's what we're doing. So, all right, 20 minutes in, we got a ton more to cover. So let's fly through the charts, see what we see. NASDAQ pausing, not quite at the 200 SMA. Did hit our bogey of 7,400, and I do expect to see some sort of sideways movement, if not some sort of shallow pullback, and then see what happens next. We are getting near nosebleeds here as far as this uptrend. And I would prefer to see us get knocked out of an uptrend before we gather energy to go up higher. Oil futures not telling us too much. When we looked at that sector, yeah, that's still probably witch at bottom, maybe ahead, left shoulder, right shoulder. Price objective can still go much higher in the XLE. Hasn't paid yet, but it's a nice bull flag, and we'll see if it does. XLF looking like the same. IWM, these are all pretty much looking the same. We talked about when we did get knocked out of trend on the SPX on January 4th. The IBB on January 4th did not. That red candle, it stayed above the 10 SMA in an uptrend. And we said we want to look for the strongest stocks, sectors, to get long when we get back in an uptrend. Well, we did, and this one led the whole way up. And now it's just grinding right at the 200 SMA. It's pausing. So there's sector rotation going on. Whether it ends up going into energy, technology, small caps, banks, we're going to identify it. Selectively, we're looking at technology stocks like Apple, Facebook, Xilinx right now. Possibly Google, possibly Microsoft. We'll see. But the money is staying in the market, and sector rotation is bullish. Transports continue to grind. Look at gold. We got paid on gold and SLV. We talked about once you get into this gap fill, expect the pause, and that's what it's doing. And then after it pauses, you got some more gaps up here that it could fill. But that was a bottoming process we talked about for now months on the videos. WV bottom that was extremely bullish. And the same thing goes for TLT. And it's not exactly a W, but it's pretty close to a W. These new lows on the bonds, TLT, they came without MACD being at new lows. That's bullish divergence. We identified that. We posted on the video. We bull flagged above a downtrend line right here. Got paid, bull flagged again. Got paid, bull flagged again. Got paid. In TLT, we were expecting it maybe to come back here to 115, 118. It hasn't. So it's still bullish price structure. We have now a golden cross 50 through 200, and this is suggesting higher prices on bonds. So that looks good. And by the way, some of you that are new to the service, I have 10% allocation to preferred stock JP Morgan, which pays me 6.125% quarterly. We already got a dividend on that. So it's nice to get paid on some income producing vehicles too, while the bonds look good. GBTC, we haven't looked at this one in a while. Someone had mentioned maybe we hit the top of this market when this thing wakes up. Well, Bitcoin does not look good, and I really don't even really want to focus on it. If anything, a sector that could peak, when the market peaks, would be probably these cannabis stocks, which we'll talk about shortly. So I went over all the ETFs. Let's look at the Apple. That is the Apple. We looked at this, right, where it suggests we could get to the 200 SMA, and I don't know why we can't get the 190. It's pausing, and I would prefer this to come and fill this gap before we go higher. I don't know if that's going to happen. These new prices are hitting highs without MACD, which means if we see a shallow pullback, the dips most likely are going to get bought in Apple. And very seldomly do we see three different entries on the 90% club back to back to back on a specific stock. But that was all based on historical chart pattern comparison using our rules, and we got paid fat. If you missed it, or if you're new to the service, you just joined, yeah, this still looks bullish, and I would be buying dips on Apple. I think it looks very good. Amazon, really grinding nowhere. I don't really like it for a new trade just yet. Netflix, we talked about how we had 51 winners, 3 stopouts this year. CME was one of the stopouts, and so was Netflix. We tried a counter trend after we got paid in a long side on Netflix. It went in the 90% club. We tried, it was on the SFL, a counter trend short right here. It bear flagged below. I think it paid like $2. We were unable to get that 1% scale, and it came and stopped you out. And we talked about you have lower probability on counter trend trades when you're trying to fight a trend. Sometimes these work as a home run, sometimes they don't. Now, what do we do now with Netflix? It's very difficult. You got gaps up in here. It's sloppier. You have moving averages that are moving up. It's more constructive. I think you have to wait. I think if you can get above Tuesday's high, 360, if it's not in the ESFL, you can take it long. To me, our number one setups are bull flags. It's just not a bull flag on Netflix. So can it work? Yeah. I just don't think it's our A1 setup. Booking, sort of stalling at the 200 SMA. Expedia looks really good. I see no reason why that can't go back to 135. Expedia looks pretty good. Tesla, what's that doing? Very sloppy, large trading range. It's really not telling us anything. Roku is in the 90% come. That one paid very fat. We talked about what's our number one trade setup. Is a bull flag the new highs or a bull flag on a break of a downtrend? Well, this one's set up on a break of a downtrend. And we didn't take it early. We used that Fibonacci retracement. How do we do that? I don't want to spend too much time on it in this video. But basically, we didn't treat it as a true bull flag, even though it was an elongated bull flag. We took the high there and the low there, and we said once it grinded above the 61.8, which we'll show you in a moment if you're new to Fibs, this high, draw that line to that low, and it was on our focus list, so when it broke above this 61.8 on the way up, I think it was this candle in here, that we were getting long, and that paid, and we used obviously that as your stop. So actually, I'm not sure where the stop is. It's on the ESFL. But that one paid nicely. Roku continues to look well. It might pause. Hopefully the market does pause and we start seeing these stocks reset up because they are a little bit extended. And the risk reward getting long up here is becoming not as compelling. Microsoft, it is lagging. It's still trying to break this downtrend line that was posted as a new setup. Still looks good. We just got to wait to see how it pans out. NVIDIA. Yeah, it came into this gap, and now it's going to slow down. Now, a bottoming process we talked about on Facebook, Apple, and NVIDIA this year. We've seen it happen with Apple and Facebook. NVIDIA's taken a little bit more time. Maybe this is a head, left shoulder, right shoulder. This is going to take more time to develop. I do think a bottoming process will develop in NVIDIA. We'll see how this pans out. It just came into a gap. It's going to slow down. Well, at least it should. And we'll see this thing set up most likely in the next few weeks. Intel still looks good to me. Bull flagging above the 200 SMA. Gap fill up here at 52. And then it's got some gaps up at 55. I think this one goes higher. Once again, you have to check when these have earnings. Texas Instruments. Yes, that looks very bullish. It's breaking out. It's going to bull flag above a 200 SMA. Nice thrusting candle higher. Looks very good. AMD looks decent. Micron looks very good. Avgo. That's a new high on Avgo. Phenomenal. OLED grinding has this nice gap to fill in here to 127. That one looks pretty good. Light slowing down. Did we look at? Okay, so there's Microsoft. Look at the software stocks. Oracle. That's almost up 90% from our last entry. Adobe. Coop. Coop looks very good. Now, these are some stocks that are just are paying us really fat. CRM. Workday, Jobs, all look very promising. Splunk, FFIV. FFIV has really been lagging so far. There's your Facebook. I think this goes to 180 pretty easy. How it gets there, I don't know. But this looks pretty good. And that's another historical chart pattern comparison that I think this one goes. Unfortunately, today it did a reversal. But that once again, it all matters on the time frame you're trading. If you're swing trading this one, you scaled today. If you tried day trading, it was a little tricky adding. You saw me get in and out of it, and basically, let's call that a wash. Let's look at that real fast, by the way. 5-minute rules of engagement. Here's the open. So you could trade this as your downtrend line and get long here. And sold some cover calls, and basically you get stopped at your entry, which I posted. I was not swing long this with a lot of you from the ESFL, and it's paid you. So you were scaling, I was looking to add here, and I was able to get some off because I wrote some cover calls. But let's call it a wash, because this is a trade that didn't work. And sometimes a wash is a good trade. In this case, it was a good trade to me because I took it off at close to my entry, made money on the cover calls, and allocated some more money to Xilinx, which then ended up scaling Xilinx. So once again, it matters on your risk profile, your trading time horizon. This was a daily setup. Let's look at the daily setup here, right here. And we used that Fibonacci to get long, and it did pay. Now, for day trading, once again, it was a little bit more difficult to trade. I think Facebook goes higher. Right now, I'm not in it. You know what I'm in. It's on the daily SFL and on Twitter posts. But I think Facebook goes higher. Okay, so what else are we going to look at here? Do we look at, Team. Team, I think this one looks phenomenal. I think this one goes much higher. Once again, I'm hoping that we see some sort of consolidation sideways to gather more energy to go higher. But that one looks good. Google, little reversal today. Did not engage long. I think once it engages and get up to 1,200 pretty easy on Google. We'll see. It's a little slow right now. Twitter, that's on the 90% club. You're seeing a red candle today, but we got paid on that. Snap, we talked about this one. Head, left shoulder, right shoulder. I don't like buying stocks under $10. So probably won't be on the ESFL until we get back above 10. But nice bottoming process we're seeing in Snap. We'll see if it continues. Baidu, 90% club, but then some. I'm sorry, that was Baba. Baidu still looks good. Sina. These China stocks, I think, are sleeping. NTS, YY, WB. Yeah, I don't see too many setups right there. Momo. Let's go into Shop. Shop does look higher. Once again, I'd like to see it consolidate. GoDaddy, Wix, PayPal, SQ. Yeah, there's not a whole lot going on right there. There's the Xilinx. We talked about that one. It still looks fine. Some of these chip stocks, I think that's where the money's flowing. We talked about sector rotation. It looks like it's going to the chips right now. Let's go to the banks, JP Morgan, Citigroup, Bank of America. They all look like they're sleeping. Goldman Sachs, Morgan Stanley. It looks very boring in that sector. Let's flip over to the CME. We talked about this is a wedging formation above a 200 SMA. I don't think it has done anything wrong long term. ICE, CBOE, they're just grinding. They're not leading. They were leading at one point. They're not anymore. All right, COP, Phillips Petroleum, CVX, Exxon. They look boring. They look like they're resting. And I probably would not put any more exposure. Now, the ERX is the triple long. So this looks fine. Just hasn't paid yet. I think once you start seeing maybe some money pour back into that sector, 24, 25 bucks seems pretty doable with ERX. Let's look at those cannabis names. Tilray showing nothing. CGC. This was a break of a downtrend, bull flag, another bull flag. These new highs were almost confirmed with MACD. So with that said, I think this is going to be a bear trap on this pullback. If I'm wrong, I'm wrong. Now, it could come down here to 42 pretty easy. So if you're not long from down here, you probably still want to wait till you get your rules of engagement. Probably want to wait till back above 50. Once we get back above 50, I think we can start talking about new highs with that name. And there's Kronos. This thing got a really exhausted 25.10. If we pull up, which I don't like to do, Bollinger Bands, RSI, indicators of overbought. Yeah, this one's crazy overbought. Now, it come down here to 18 bucks, probably will reset up. And I think once you get back above 21.5, I think this will reset up long for Kronos. All right, let's go to the IBB sector. Amgen, it's got the gap. Don't really love it. Gilead, slow. Jazz. This sector looks like it's fallen back asleep. Alexion, ISRG, aluminum, X-ray. X-ray is just grinding higher. REGN was the leader, but look at this thing get knocked out of an uptrend. So once again, these new highs on REGN were not confirmed with MACD. So this one can come down to the 50 SMA pretty easy. So do not pick a bottom with some of these stocks that are starting to show relative weakness in that sector. Win, grinding, we talked about the 130, 140. We're getting pretty close to that 130 bogey. Could rest, then, we're talking about 140 after that. LVS, very, very, very nice trade in the 90% club, MGM. And then we have this ALGN, which is bull flag and has this gap to come into. So we've talked about a lot of stocks. We're going to put more stocks on this watch list as I'm starting to see a lot more different new stocks develop for us to focus on. These stocks that we've been focusing on really for a long time, I might start deleting some of them and adding some new ones because there's really some new ones that I'm looking at that look very good. So the bottom line is, you know what I'm long, right? I'm long the ES. I'm long Spiders. I'm long TKQQ. I'm long Apple. I'm long Xilinx. I'm staying long. I'm staying ultra long, over 100% long market exposure versus my stops, which are listed on the daily update. Don't become too emotional, too opinionated, too frustrated with Twitter tweets, right? Twitter tweets are for intraday, super aggressive day traders. That's what it's for. I update you with charts. I post supplemental charts, chart reviews, some of my new real-time posts that are live. And once again, the next couple of weeks, I'm going to go back to start posting some 5-minute rules of engagement on the ES 500 futures. But those are not for everybody, only for the aggressive traders. The people that are getting paid the most are trading the focus list. That's where 90% of the 90% club came from. That's where I'm spending most of my time is scanning, preparing stocks that are showing relative strength that look good, that look very similar to historical chart pattern comparisons we've seen before that end up being on the 90% club. That's all I have for the market video update. Have a great day.